Hello, everyone. This is Ryan with Numbers Up Finance. I just want to do a market wrap for Wednesday, March 27th, 2019. We're going to start by taking a look at the futures for SPY. This is /ES on the 4-hour chart. Just cover the developments that happened today in the market. Nothing significant, but it probably contextualized things pretty nicely. It's pretty straightforward in my opinion, and I'll just give my opinion on what I can expect to see to close the week. So by taking a look at ES here, we can start by looking at this wedge pattern on the 4-hour chart. I don't have the resistance level drawn here, but you can kind of make it out for yourself. We, compressed pretty tightly at this wedge, followed this trend line, and then broke it last week. So what we had was a breakdown. We had a back test to open up this week, and then we had a strong selling off today to open up the day. And now we're back testing this resistance level. And I say it's a resistance because, we've had a tag here, 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 and here. Four reaction points prior to where we're at now at this level. And that's just, in a couple week span. So clearly strong resistance right here. I wouldn't expect us to pop above, but worst case scenario is we pop this level and we back test this trend line again. I don't think we're going to back test again because we already back tested it once. So, that's pretty characteristic of these wedge breakdowns is you'll break it, you'll back test it, and then you'll start heading down again. And of course, just knowing nothing can go straight up and down forever. We get a strong selling off to start the day, 3 red 4-hour candles in a row. You follow it up with a green candle. We back test the resistance, and then we'll probably see it follow up with some more red candles going forward. Expect to test this 2730 level, with maybe a week or a week and a half. Depends how the markets move. It depends how steep we sell off. But I think the stage is setting up nicely for a good sell-off. Of course, it's anyone's game still. We're still trading between that 280-ish, 282-ish range, but what I noticed today in the markets, which was very big, was that the S&P 500 sold off strong to open the day. It back tested that line very nicely, and it appeared to want to break it at the end of the day, but the bears stepped right in, and they pulled it back down below that resistance level to close the day. And that's what was absolutely huge in my opinion. I can pull it up on SPY actually to contextualize it even more. Very similar chart to /ES. Obviously, they're the same index, the S&P 500 index. But again, let's just take a look at it on SPY. We've had this wedge forming. We broke it last week. We tested this resistance level again. We didn't get a back test of the trend line per se, which isn't not necessarily it's not ideal, but it's not the same on ES as it is on SPY. But what I can say is the same is that we opened today with a very strong sell-off, 3 red candles in a row, 4 actually if you count this one here. We had a little gap though, that's why I say only 3 in a row. So 3 red 4-hour candles in a row, and then you get a healthy back test of this 280 trend line. And for anyone watching the markets at the end of the day, we pushed towards that 280.50 level. We look like we wanted to take it out with conviction. For anyone on the bearish side of the boat, you're probably a little nervous, but then the bears stepped in at the end of the day, pulled it down for a close below that resistance. And what we're probably getting here is just a back test of this resistance level again. So I'd expect to see some more red candles to follow. And just know that if you're shorting the market, if you're going long on the market, whatever your case may be, it's not going to go straight up and down forever. So we have to get these healthy back tests of trend lines, of resistances, of supports, and that just makes for, a healthy correction or a healthy uptrend, whatever have you. I will say, though, that if the bears start to run away with this game and we start to see what I believe to be the next leg down in a bear market, you're not going to have as many, opportunities for those back tests and those time to get out if you're on the wrong side of the game. I had that marked by our trend lines here. We have this green trend line, which just represents our prior lows back on March 8th. And then this red trend line. This support level here is, for all intents and purposes, one of the strongest ones we have. And if we push right through that with full conviction, by all means, we probably won't be slowing down much. And I think we'll absolutely try to undercut these lows, within the next couple months. We'll see how fast we move. But that's big picture stuff. Let's stay where we are today. Let's stay on this, 4-hour chart. We back tested this line for all those wondering, are we capable of pushing up? Yes, but I would expect a push down to follow up and to open tomorrow morning. A strong red close to the week, nonetheless. I do want to point out on the hour chart, actually, a cool development for anyone looking at the S&P 500. Just get a little zoom in on it. We have a bearish flag forming. This isn't the cleanest one I've ever seen, but it's one you can, I don't want to manipulate the charts the wrong way and have any confirmation bias, but you can essentially draw a bearish flag out of this. It holds pretty nicely, and you can just see a new candlestick pop in there, actually. You have a nice little bearish flag forming right here. Typically, the way these will play out is you'll take the pole of the flag to begin with, you will take that and measure it from the, oh, sorry about this, it's a messy drawing. You will measure it from the point of breakout, and that gives you a target around 277. Now, that's a very informal target, but that's just what I noticed on the 1 hour charts for SPY. You'll take the length of the pole, you will duplicate it and measure it from the point of breakout, and you can interpret that any way you want, but those bearish flags typically play out the way you'd want to see them play out. So again, make sure you do your own technical analysis, make sure you have your own price targets laid out, but I could see a nice follow-up to the red open we had today. And now I just want to finish this video by covering the regional bank sector. This is ticker symbol KRE. You'll actually take a look at the daily charts for this. Again, this is a measure of the regional banks. It's a pretty good indicator for where we're heading in a business cycle standpoints. As we enter that next wave of the business cycle towards the contractionary phase, you'll see a strong sell-off in the regional banks. Now, I could get into all the Fed noise or whatever. That was mostly last week. I don't really want to cover that too much, but I just want to point out two things that I see in the regional bank chart, and they're absolute polar opposites. And it's for your own technical analysis and interpretation, but I thought I would point them out. So, the market is largely, or the regional bank sector is largely dictated by where the market moves. Of course, it's not parallel to it, but it's largely dictated by where the market moves nonetheless. So there are two patterns I see forming here, both on opposite ends of the spectrum. So the first pattern is this inverse head and shoulders pattern on the daily charts for the regional bank sector. And you can see that for yourself. It's one of the most explicit ones you could find. You have shoulder 1 here, you have head, and you have shoulder 2 here. And typically these will be signs for, a trend change, a long-term reversal. The same way a regular head and shoulders will typically be a sign of a downtrend. An inverse head and shoulders, which we have here, is a sign of an uptrend. My problem with that, however, is that we broke this trend line here that was once supports on the daily chart back in October. Now, again, you can interpret this a couple ways. You can interpret that as the inverse head and shoulders pattern that I just pointed out, or you can interpret it as a breakdown of this line and a back test today, followed by another downtrend to follow. Now, you have to have a picture on the long-term market to be able to determine where you think the regional banks are going, but, I just pointed out a bearish flag on the 4-hour charts for SPY, or the 1-hour charts, mind you, and if you look at it on the daily charts for the regional banks, you can point out a clear bearish flag without any type of debate whatsoever for this sector. And again, these are very crudely drawn. These are informal targets, but we'll do the same thing. We'll take the length of the pole and we'll measure it from the point of estimated breakout. And we'll get a pretty steep target nonetheless that's testing those lows from December for the regional bank sector. And that's a pretty clean flag pattern. That's 4 red days followed by 3 green days, followed by, you fill in the rest. So that's how I would see it. Now, the reason I'm siding with the bearish flag pattern is because of this significant price level here at $50. We broke down and we're back testing it with a bearish flag, and that's likely going to follow with, another move down. But again, do your own analysis. If you want to short it, by all means, go for it. And what you're looking at here for shorting it is a great expected value trade because, you can just set a stop slightly above this line and run with an ETF on it. So that's just a setup I wanted to point out. Keep in mind that regional banks they move with the market too. So if, the market's pushing up, regional banks aren't just going to collapse. But again, inverse head and shoulders, bearish flag pattern, opposite ends of the spectrum. Make sure to do your own analysis and, formulate where you think it's going to go. That's just a good trade setup I wanted to point out to. ETF for that would be WDRW. That's a short for regional banks. I'm not sure of the lawn actually, but I know that's a short ETF for it. So, yeah, other than that, we'll have updates on the rest of the week. Remember to keep an eye on those weekly charts because it's so important that we close, where the weekly charts close. Relevant to that 282 resistance level. But in the meantime, that's all I've got for today. So thank you for listening in. It's been Ryan with Numbers Up Finance, and get your numbers up. Happy trading.